Welcome to FT Markets. The European Central Bank is due to meet in Frankfurt this week, and top of the agenda is the persistently low inflation which continues to plague the Eurozone's economic recovery. With me to discuss this is Elaine, the FT's capital markets correspondent. So what can we expect from the meeting, Elaine?
So this meeting is going to be really interesting because a few months ago we were all talking about the fact that the Eurozone economic recovery seemed to be in play and things seemed to be going quite well. And we were wondering whether the Eurozone's huge, massive bond buying program might actually be reeled in early. Now we're looking at things from the other perspective. So there's been so much turmoil in markets. The US is maybe now expected to push back its interest rate rise. And in the Eurozone, inflation has actually come down again. So if we look at our first chart, we can see that this is the market expectation of what it thinks Eurozone inflation will be in 5 years' time over 5 years. And this is something that Mario Draghi has referenced in the past as being a really important measure that he's looking at. So if you look right at the beginning of the year, this is when the ECB began its bond buying program or announced its bond buying program in January, you had it falling to this low, below 1.5%. Since then it came up as things looked like they were recovering, and then in August we've seen it drop right back down again, so close to 1.6%, although it has since recovered. So this low inflation is what we're expecting to be talked about a lot in this meeting.
And what do markets so far think of this bond buying program, otherwise known as quantitative easing? What's their verdict?
So the ECB has been buying 60 billion euros of mainly government bonds since March. That's every month. And as we can see from this chart, it looks like it was starting to work, at least in the way that markets saw it. So it looked as though Eurozone economic recovery was underway and things were going all right. And if we look at the German 10-year bund, so this is the benchmark bond index that we look at for Eurozone markets, we can see that that the yields were coming up, which suggests that interest rate expectations are rising, and that would mean that inflation's coming up and things look like they're recovering. But this summer has just been a completely different story. So the recovery that was underway has been threatened by what's been happening in the rest of the world.
Well, indeed, that brings us on to the role of China and the country's own domestic economic fallout and what impact that's having both on emerging markets and trade in the Eurozone. What kind of impact do you think it has had, if any, on the Eurozone's economic recovery?
So it's had a huge impact on markets. We've seen the euro has strengthened, money has gone flying into the euro, and we've also seen stock markets in Europe crash down. So Europe hasn't been immune to the problems in the rest of the world at all from China. But what's been quite interesting is that bond markets, while we have seen this yield come up, bond markets haven't reacted to quite the same extent as they might have in the past, suggesting not all of the money is flowing into bond markets, into these haven bond markets like German bunds or UK gilts. So that's been a slightly strange experience of the last few weeks. But what these kinds of graphs are telling us is that the Eurozone is being badly affected by what's happening in the rest of the world. The low oil prices, the shocks in the global markets mean that the ECB, when the ECB meets this week, it will be thinking a lot about whether it may need to extend its QE program because of this persistent low inflation.
And of course, you mentioned the euro appreciating, which is precisely the opposite of what the ECB have been trying to do in order to boost the Eurozone's exports.
Absolutely. And so now you have banks, including Barclays, say that maybe we'll see this huge 60 billion euro a month QE program actually extended beyond the September 2016 date that was initially given. So it could be this open-ended program, and we could be seeing just the beginning of.
Thank you, Elaine. So low inflation set to dominate proceedings tomorrow at the ECB, but also likely coming meetings, and questions as to whether to extend and expand the ECB's current asset purchase program.